The Crypto Fear and Greed Index is currently sitting at 30 in the fear category, which has been moving up gradually since setting the yearly low on November 21st, 2025 at 10, with many crypto influencers on YouTube and abroad talking about how indicators are now flashing buy signals. Is now the time that we're about to see the crypto market start turning around? Or is this just a fake out before we see another leg to the downside? One thing that you never want to do is underestimate market psychology, because 99% of people who trade are wired completely backwards than the way they should be in order to trade effectively. And never forget that 90% of people who trade lose money because their emotions are aligned perfectly with the movement of the market. When your crypto is going up, when your crypto is going down,
it's going to be cold, it's going to be gray, and it's going to last you for the rest of your life.
And as always, this is not financial advice and is nothing short of the rantings and ravings of a man who wakes up every single day right here, right in Punxsutawney, and it's always February 2nd, and there is nothing that I can do about it.
Then put your little hand in mine.
First off, we're going to jump over and take a look at a clip from a Bitcoin video that I released on July 9th, 2025. But I think that something's being set up here that nobody's expecting. And right now, we are showing a slight bearish divergence between the stochastic and current price. But this could be negated easily if price came up and took out this all-time high right here, moving upwards, which would wipe that divergence completely off the map. But it seems like to me what we could be seeing is some kind of a setup here to where Bitcoin may come down just a hair, bounce up here, doing a massive fake out to the upside, then coming back down, filling this CME gap, maybe getting a dead cat bounce before coming back down into this yellow box, perhaps even down to this lower trend line. If it broke below this just a little bit, this would cause some serious panic in the crypto sphere, as people would be dying to sell their positions, which would be the perfect situation for smart money to take profits on a percentage of their gains that they've gotten so far. But at a certain point, once retail is scared to death, we could very well see something like this, to where a price comes down, hits a certain level down here somewhere, perhaps in this range, then pops up quickly, making a big move to the upside, taking out this previous all-time high, retesting off of this trend line, then moving up to higher ranges, to which we would then see a top with price falling back down and essentially starting the alt season from this point as Bitcoin started to trend down. But as it seems right now, looking at the charts, it looks like to me that Bitcoin is actually bearish, but the market makers are not going to allow an opportunity like this to pass them by. If they can bring this down and fake out retail and absorb the additional liquidity from whatever level this decided to go to, whether it was at the CME gap at 92,000, whether it came down here a little bit lower into the 80,000 range, whether they did the ultimate shakeout, taking it down here into the mid-75s, that move from here, moving up to the 115, 120, 125,000 could be incredibly profitable for them and would occur in a relatively short amount of time, to which then they could use the rush from retail, chasing the price all the way up, to use them for exit liquidity a second time for a larger percentage of their positions, to which then they could pull out the profits from Bitcoin and put them into altcoins as the price of Bitcoin basically came back down to lower levels, which would essentially start the alt season and allow market makers to ride up the altcoins for that run, basically allowing them to double dip and make an absolute fortune, while a big chunk of retail ends up getting wrecked in Bitcoin because they were overly bullish.
Then put your little hand in mine. There ain't no hill or mountain.
Now, did I get everything absolutely correct in that video? No, I did not, but I was very, very close. And anyone who has attempted to predict the future knows very well just how difficult it can be. But when we jump over and actually take a look at the Bitcoin charts, and by the way, my charts do change from week to week depending on how the price action develops, so you always want to stay up with the most recent charts. But we can see that Bitcoin is currently trading within this well-defined channel. Bitcoin exhibited a 5-wave impulse to the upside, ending right here after setting the all-time high during the week of October 6, 2025. Keep in mind, this is on the weekly chart. This wave 5 right here of the primary wave consisted of a 5-wave move to the upside that we can see right here. This is the area that you saw in the video that I just showed you from July. After releasing that video, price moved to the upside here, getting rejected off of the upper trend line twice, plateauing right here. Price then fell back slightly, swept the liquidity resting under that plateau, then moved up and set the new current all-time high before price collapsed to where we are currently trading now in this 5-wave impulse to the downside, which we currently look to be trading in the wave 4. This could be the wave 4 termination here, meaning that we still have a wave 5 to the downside. The price is currently trading below the equilibrium zone, and after pushing through it, was rejected nearly perfectly off the equilibrium line, which is the green line in the center of the equilibrium zone, and is now trading slightly below the equilibrium line, but still within the equilibrium zone itself. Price is also exhibiting a bullish hidden divergence on the weekly chart, moving off of this point right here, which we can clearly see on the indicator. It is also just about to cross over with the blue line crossing over top of the yellow line on the CCI. This is generally a bullish signal. And although I don't expect this wave 5 to be super deep, I do think that we'll see it at least sweep this low of this candle right here, but it very well could come down and sweep the low of this candle right here as well, which would actually end up negating this bullish hidden divergence. It could also potentially come down here and hold in the range of this bearish order block. If it does sweep this previous low, it would just kind of go in at just a little bit like this. If it was going to sweep this low, then it would likely come down somewhere in the range right here on the daily chart. But as of now, I'm just keeping it resting in this area till I have more information. But in regard to this CCI, it's not guaranteed that we're going to get a crossover on the first attempt right here, because if we are trading within this wave 4 with the potential wave 5 to the downside, there is a chance that we could see a rejection off of the yellow line with the blue line swinging down first, then swinging upward, which would make a lot of sense in regard to this wave 5. And if we actually go back and take a look at the previous cycle, we saw something very, very similar. With the 5-wave Elliott Wave impulse to the upside, sweeping the previous high and setting what at the time was the new all-time high. Price then broke down exactly as we're seeing now in a 5-wave impulse to the downside. Now this move went quite a bit deeper than what we are currently seeing. And if we simply take a box here down to the low, when this 5-wave Elliott move impulse actually ended right here, which then moved into the 5-wave impulse up to the new all-time high in the range of where we are currently trading. If we take that box and we put it off of the current all-time high right here, and actually zoom in on this a little bit just for comparison purposes, we can see just how much bigger that 5-wave move to the downside was in the previous pattern than what we're seeing right now. For all intents and purposes, it looks like what we could be seeing right now is actually the wave 1 of a much larger impulse, which could potentially end up looking something similar to this, with the wave 1, the wave 2, moving into a wave 3, with a wave 4 down to a wave 5, meaning that we could see much lower prices in regard to the Bitcoin prices moving forward. But if we switch over to the monthly chart and actually zoom in here a little bit and kind of take a look at how these previous cycles have played out, because we've had numerous cycles like the one in 2011 that popped up and pulled back, the one right here in 2013 that popped up, pulled back, the one right here in 2017 that popped up and pulled back, as well as the one that we were just talking about right here in 2021 that pushed up and pulled back. All of these cycles look very similar, but the one thing that we see for sure is that we get an impulse to the upside, followed by a correction, followed by an impulse to the upside, followed by a correction, followed by an impulse to the upside, in which we are now doing the exact same thing. But if we do take this box right here that we marked off of this cycle in 2021 and compare it to previous cycles, we can see that going back off of this all-time high right here, that this cycle is actually smaller than the previous cycle's correction. If we move it back down here to measure it against the correction we saw in 2013, it's even smaller than the one that we saw here in 2018. If we go even lower and move it down here, we can now see that from this cycle top, it's even smaller than the one that we saw in 2013. So essentially what we're seeing is the law of diminishing returns working into these cycles. Now jumping back to the current price action, putting this previous movement back into place where the current price action is trading, if we go back and take a look at the CCI to where we're about to see this crossover right now, if we go back to the previous cycle when this occurred, we can see that down here, during that correction, near the area of the Wave 3 termination, we actually saw something very similar. As the blue line was getting ready to cross over the yellow line here, we saw a push up right here into the Wave 4 termination. Even though the price had crossed over the yellow line, we still saw a pullback for the Wave 5 coming down to the bottom that we eventually saw during the week of November 21st, 2022, right here, starting the new bullish 5-wave impulse to the upside. So we can see that during that time, price crossed over, moved upward, fell back down below, then bumped into it and bounced off of it once again. What we are seeing here with this Wave 3 termination between the Wave 4 termination with the Wave 5 could be something that we could see with the CCI in the current price action, meaning that we could potentially see this CCI bounce off, coming back down, forming the Wave 5 to the downside, then eventually crossing back over the yellow before seeing a move to the upside. But with the potential for this to not only just be the correction in itself with this 5-wave move, and which potentially could be the Wave 1 of a much deeper move to the downside that we can see here with 5 waves total, we need to keep our eyes on certain things to help us determine whether or not it is possible that this is in fact just the Wave 1 of that 5-wave bearish impulse to the downside, rather than a single wave moving into a new impulse to the upside. Now, going back to the previous cycle high here that we saw during the week of November 8, 2021, we can see that it formed a 5-wave move to the downside, which ended up being a Wave 1 of a much larger bearish impulse to the downside. As it currently sits in the price action we're seeing now, we are pushing up into the Wave 4 termination, so we can't go off of this low right here. But we can see, when looking at these fib levels right here, by going off of the Wave 5 termination, and up here to the start of this 5-wave move as a whole, that once this 5th wave was complete and price started moving to the upside here, going off of that 5th wave termination point, we can see that the price moved perfectly up to the 0.382 Fibonacci. And when we jump over and look at the Elliott Wave rules in regard to the 5-wave impulses, we can see that some of the numbers that we tend to see on these retracement levels are the 23.6, the 38.2, as well as the 50% fib. But to where we are currently trading, not having this 5th wave being in, we can instead measure going off of this low right here, which is the wave 4 termination of the bullish impulse to the upside, which is the primary wave, and then going off of the 5th wave termination, and then looking to see what the retracement level ended up looking like. We can see that when going off of the primary wave 4 termination instead, that once price had put in this wave 5, price traded up above the 0.382 fib and nearly touched the 0.5 fib before setting the wave 2 termination, then falling back down into the wave 3, making what we saw during this time a much larger bearish impulse to the downside. Now, if we jump back over to the current price action and pull a Fibonacci going off of the primary wave 5 termination resting right here, and pull that fib level coming off of the wave 4 termination of the primary wave, it gives us the same fib levels that we used previously on the previous cycle. We can see right now that the wave 3 termination came down into this bearish order block on the daily, bouncing off of this lower trend line, has now traded up perfectly to the range of the center of the equilibrium zone, getting rejected off of the equilibrium line, as well as trading off of the 50% line for the Gaussian channel. Both of these are bearish, making it even more likely that we're going to get this push to the downside. But if we currently look at this right now, we can see that the wave 4 is actually trading up to the 0.382 Fibonacci already. But essentially, once this wave 5 plays out to completion, whether or not it sweeps this low here or if it sweeps this low here, wherever this ends up, once we see this start to move to the upside, it could be one of two things. It could be forming a much larger bearish impulse to the downside in the form of this wave 2, or it could be forming a new impulse moving to the upside. Going back, looking at the previous cycles, this is what we have always seen in the past. So if this is in fact a wave 2 and we are starting to see just a small fraction of what could be a much larger move to the downside overall, then we want to be watching this 0.382 fib as well as this 0.5 fib for a potential rejection. So essentially what we would be looking for is a 3-wave move to the upside to form this wave 2. So if we start to see a 3-wave move form once this wave 5 is complete, and it starts to look like it's going to get rejected at this fib level, the 382, or at the 0.5 fib level, we need to be concerned that we could potentially be seeing a wave 3 coming right behind it. If you've been thinking about trading spot, or if you're just looking for a place to swap your cryptos for 0 fees, use my link and sign up for Bitunix. You'll be glad that you did. Now jumping back to the monthly chart and adding the Bitcoin rainbow chart right here to give us additional information. And if you're not aware of what the Bitcoin rainbow chart is, you can simply do a Google search on it and find it. You'll see it right here. This is basically the curve that has been used since Bitcoin started trading, going all the way back to the very beginning, of which price has basically traded within this curve, breaking out only a few times, as we can see right here. It's also broken out a few times below, which I will show you in just a moment. But this is basically what most technical analysts use as the backbone for studying Bitcoin based on the halving cycles. And as we can see right here, when we set this high right here before taking it out and setting a new all-time high in the previous cycle, it touched the very top of that trend line. It also touched the very top of it right here during the 2017 cycle, as well as broke slightly below it here before moving into the wave 3 in the 2020-2021 cycle. We also saw it come down and push slightly below it right here in August of 2015. We saw it push up through the top right here in November of 2013. We saw it push up through the top right here in June of 2011. But the one thing that we can see by looking at this chart is since this was established and started moving in a more organized fashion as it was being traded in higher volumes by a lot more people with a lot more money coming into Bitcoin, which essentially stabilized the price, it has not really broken below this lower trend line other than in these areas for very short periods of time. Now, if we come back to where price is currently trading and we add our box from the previous cycle, we can see that that previous cycle takes us down to this bullish order block on the monthly, which shows that it could potentially go as low as around that 30,000 level, even slightly lower. But when we compare this to the rainbow chart, we can see that it is significantly below the purple line, meaning that it's very unlikely to go too deep below this. It certainly could happen, but as we've seen, this has only happened a few times in previous cycles, and it did not last very long. And I also just demonstrated that each cycle we move into, the law of diminishing returns is kicking in, which means we should see a smaller move for this particular cycle. And when we look at this chart overall, with the potential wave 5 still to occur, moving into what could potentially be the wave 2 of a much larger impulse to the downside, also rejecting in the area, also potentially rejecting in the area of this equilibrium zone, perhaps even the 0.5 fib, it seems more likely that if we do see this much larger impulse to the downside, that it's likely to be much smaller than what it appears to be here, to where we could actually see something more like this, with the price pushing down in the area of this purple line, which is gradually going to carry in this area here. And with the previous cycles lasting about a year long, we could expect that if this does occur, it very well could push us into that timeline of early summer, if it ends up being a smaller move like this, potentially even towards this time next year if it ended up being a much deeper correction. But it seems to me this bearish fair value gap right here is eventually going to align with this lower purple line on the Bitcoin rainbow chart, lining up fairly decently, at least playing in the same area. So the first area I would be watching if we do end up seeing a larger bearish impulse to the downside would be this bearish fair value gap right here. But if it does defy the odds and break the pattern following the previous pattern more, then we very well could see the price come down into the range of this bullish fair value gap right here, which could put price coming down as low as about that 35,000 to 30,000 range like we saw in the previous cycle. But it seems more likely to me that this area right here is going to be the area which we would ultimately see, assuming that we did play out this 5-wave move, which would basically put price somewhere in the range of about $50,000 per Bitcoin. And at that point in time, this purple line should be intersecting fairly closely into this range, somewhere around the month of May, which is why it's so important for us to watch these fib levels right here that we just talked about to see how this wave 2 starts to form and which levels it hits. Because if we see a rejection in this area of the equilibrium zone around the 0.382 fib or the 0.5 fib, and it's exhibiting a 3-wave move similar to this, then we definitely need to be cautious, because if we see a rejection, there's very likely going to be a 5-wave bearish impulse to the downside following. So we want to watch the structure as well. But if we start to see something with the price movement moving up like this, resembling more of an impulse to the upside, with that impulsive look rather than a corrective look, we very well might not see the larger 5-wave impulse to the downside, and instead could see the completion with this 5-wave correction right here. Because, as we saw earlier, generally these cycles tend to end in the higher ranges of this Bitcoin rainbow chart. And with the current cycle, we didn't get anywhere even close to that range. So it would stand to reason that since we saw the 2 previous cycles come into that area, that we could potentially see it again. But in order to do that, it would require the chart moving in a way that we have not seen historically. Now, I know when you look at this 5-wave impulse right here, one of the first things that we're going to get in the comments, I guarantee it, is that the wave 1 is way too long, and the wave 5 cannot be longer than the wave 3 because that would make the wave 3 the shortest, and that violates Elliott Wave rules. So by removing the rainbow chart, we'll simply just sketch a white line right here, marking out the wave 5 on this chart. We'll pull it right here, coming off of this previous move for the wave 2 termination. Now I know this is hard to determine because they're definitely shooting at different angles, but all we have to do is come down here and get our projection tool, marking off of the bottom, marking off of the top of this line, and then projecting it forward, and we can see that in fact the wave 3 is not the shortest. So this is a valid wave 1, even though it looks absolutely ridiculously long on this particular chart. Now, depending on how Bitcoin moves, depending on how this correction ends up playing out, whether it's just this single wave 5 or this is the wave 1 of a much larger 5-wave impulse to the downside, either way, this is going to affect altcoins massively. And we don't know exactly what's going to happen. We don't know exactly how it's going to affect altcoins. But one thing that we can do for sure is we can monitor this wave 5 impulse to the downside to see how it starts to unfold. I know a lot of people chased this wave 4 right here yesterday, moving into those green candles, and are now paying the price for it. And I absolutely believe, I certainly could be wrong, but I absolutely believe we are going to see this wave 5 push to the downside, which is going to crush a lot of people. And once this bottoms out, wherever it may be, and we start spitting green candles moving up towards the equilibrium zone again, a lot of people are going to pile in here. The 99% will not be able to resist. But that's perfectly fine if you're just a trader. But depending on what happens here and how this unfolds, they could be setting themselves up for massive, massive failure. So you definitely need to be cautious. But because of this video, you know what to watch for. You know the levels to watch. You know the structure to watch to see how this unfolds. But with so many videos that I've been doing on the ISO coins especially, all of them are showing bullish hidden divergences or bullish divergences of some form, which does leave that wildcard factor in play that we could see this wave 5 terminate, then see a move to the upside. Perhaps even starting a 5-wave bullish impulse, moving up and taking out this previous highs and continuing the bullish cycle of which we just had a bearish break for this correction. So we need to keep in mind both potential alternatives. And we also need to be very careful with our capital because, as I always say, capital preservation and risk management are the most important part of trading/investing. And by all means, do not follow the 99%. Do not follow the herd. Turn 180 degrees and move in the opposite direction. Once you do, trust me, you'll understand the difference.
Then put your